Stocks drift lower as concerns over US trade resurface. Realty and consumer durables are the big losers, while auto and FMCG eke out minor gains. Mahindra & Mahindra shares surge after a better than expected quarter has several analysts revising their price targets higher. Most expect the auto major to continue growing strongly in the tractors, SUVs and electric vehicles. Banks led by SBI and PNB are likely to file a review petition on Supreme Court's order scrapping JSW Steel's acquisition of Bhushan Power and Steel. Indian Overseas Bank tells CNBC-TV18 that all options are on the table and a final decision is likely in a few days. Pharma stocks have slipped after US President Donald Trump signs an executive order to boost domestic production by asking the FDA to speed up approvals for local units and increase fees and inspections for foreign producers. And Ather Energy makes a subdued entry on the bourses, listing with a small premium to the offer price of 321 rupees a share. The EV maker, though, remains confident of growing volumes, market share and margins in FY26. Good afternoon, you're watching Business Lunch live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. It's a quiet day for the markets as we count down to some major broader market results in the second half of the trading session, and they've just started to trickle in. But for now, the Nifty remains in a cautious mode as we speak, still at that 24,375 levels, around about yesterday's low, which was 24,400. So it is important for the index to first hold on to yesterday's low and then build on. Of course, there are these geopolitical tensions at the border, the mock drills that are to be conducted tomorrow. That is also keeping sentiments in check. But of course, two names that you'd want to speak of just before we move forward. One of them is Polycab, and that reported results just a few minutes earlier. The results were a beat on expectations, but the bigger takeaway was the fact that the FMEG business has turned break even, and it is their first profit after 10 quarters of making investments. The stock nearing the highest point of the day, 0.7% higher. The company has also announced a 35 rupee dividend, which is the highest on record. So important to see what the company guides for in FY26. But for now, strong results from Polycab at the face of it. The other one is Sundaram Clayton, whose numbers you can see flashing at the bottom of your screen. The company has returned to profitability compared to a loss in the previous quarter, although that is aided by a one-time gain of 200 crores. So if you exclude that one-time gain, the losses have widened on a year-on-year basis, but revenues have gone up. So the stock is seeing a bit of a reaction here, 5.5%, almost 7% higher now is Sundaram Clayton, and EBITDA of almost doubling from last year. That is the bigger takeaway. The EBITDA doubling from last year. Margins have also doubled from last year, 5.5% compared to 2.7% on a year-on-year basis. So strong results from Sundaram Clayton, although the bottom line is reflective of a one-time gain. But the other big story of the morning was Ather Energy, the first mainboard IPO of FY26, the third largest IPO of the year so far. It was a subdued start to its trading history, ended listed at a 2% premium, has given up those gains, currently trading around about 4% lower from its issue price. And earlier in the day, we spoke to its executive editor and CEO Tarun Mehta, and he believed that this is what he had to say on the company's strategy going forward.
We are extremely bullish about the near-term growth because of distribution, because of how Rista, a new family scooter, is landing in the market, and generally how well the India premiumization story is really taking off, where Ather really plays in the center of it. Overall, I think both margins and volume and market share, all three should trend really well this year. I am personally definitely expecting an even better trajectory than what we saw in FY25. Now, stores have been expanding very rapidly in the last few months, particularly, and you will keep hearing about this in our commentary going forward. Let me just give you some context. 260 odd stores by December. Most of our industry peers are at between 700-800. We even hear 1,000 plus stores already live. There are hundreds of cities across the country where Ather has not even opened its first store. But the bigger impact on profitability is really coming on back of volume, which is why I'm again and again keeping us focused on how volumes are trending up because fundamentally the unit economics that we have cracked, and remember, our unit economics is a very clean one. We don't run our own stores. We have very limited dependence on subsidies. It's only one central government of subsidy of 5,000 rupees.
The newest kid on the block, Ather Energy, currently a subdued start to its trading history. But here's a CNBC TV18 exclusive then. The government is planning to make up the shortfall incurred from the cut in income tax through quick disposal of the pending tax cases. Sources are saying that the tax department has directed field formations to actively work on reducing pending litigations. Timsy is here with more on this. Timsy, what's the message to field formations?
In what could help the government to easily make up for the 1 lakh crore worth of revenue shortfall that the exchequer will face on account of the relief given in the new income tax regime in the budget, the Central Board of Direct Taxes aims to reduce pending litigation to garner some stuck taxes via quick disposal of pending cases. According to sources, the Income Tax Department has directed the field formations to actively work on reducing pending litigation in its yearly Central Action Plan, asking the field to target with an all-hands-on-the-deck approach on pending cases at commissioner level. The yearly action plan aims disposal of 2 lakh appeals at commissioner appeals level, which has as many as 10 lakh crore worth of disputed demands. Sources further shared that the plan directs field officials to compulsorily dispose top 1,500 appeals, urging to keep focus on liquidating the number of legacy appeals. A copy of the plan seen by CNBC TV18 also shares that the tax department has told the field formations that there is no embargo on disposing appeals filed during the year. The taxman has also referred to a silver lining, stating that the number of pending appeals are for the first time in the recent past down from 5.49 lakh cases in April 24 to 5.38 lakh cases in April 25. The taxman has also lauded the fields by sharing that a record 1.72 lakh cases involving 6.22 lakh crore worth of disputes were disposed of during FY25 by Commissioner Appeals, and now to be seen as whether this daunting target gets achieved or not, and this performance continues, something that we'll have to wait and watch.
Timsy, thanks a lot for that. But stay on, because GST authorities have turned up the heat on global digital service providers. As the digital economy surges in the country, the GST authorities are ramping up enforcement efforts to bring foreign digital service providers under the tax net. Give us more details on that.
As the digital economy surges in the country, the goods and services tax authorities are ramping up enforcement efforts to bring foreign digital service providers under the tax net, even after already having significantly expanded the definition of online information database access and retrieval, that is OIDAR services, in October 2023. CNBC TV18 has now learned through sources that the Directorate General of GST Intelligence is still coming up with cases where such platforms and entities have not registered in the country and thus are neither reporting business generated from India and nor they are paying the due GST. Keen on bringing these foreign digital service providers under the GST net, DGGI is now pushing for registration, higher compliance from these online platforms which are not registered in the country. In its efforts, sources said the DGGI is sending emails and warnings to Indian firms that are using these foreign platforms seeking compliance. DGGI, which is the enforcement arm of Center for GST, is also asking Indian payment processors to block payments to these non-compliant foreign firms. Not just this, DGGI is also accessing forex transaction data from banks and has also sought aid from the Reserve Bank of India to enforce cross-border compliance. DGGI is also seeking suitable amendments to the law to empower itself so that the agency can take action against such non-compliant websites. Just to remind our viewers, the GST mop-up from these online services has grown up from 80 crores in FY18 to over 2,600 crore rupees in FY24. Meanwhile, experts attribute this growth to the broader scope of taxable services, the change in definition which actually came in October 2023 through amendments. Now to be seen as whether this DGGI action against non-compliant online service providers actually garners some more fruitful returns or not, something that we'll have to wait and watch for.
Timsy, thanks a lot for that. And coming back to markets, hear out some market opinion from CLSA's Vikash Kumar Jain. Now, he's striking a cautious note on the market rally, saying that India is currently the most expensive market in the world. Listen in.
India is the most expensive market in the world, most expensive. And that's where what is the starting point for us? This rally in India has been driven by the need to find a place to hide. It is not a rally which is being driven by some kind of a beta where you are playing for the excitement of things continuing to get better from very good. That's not what is the foundation of this rally. I mean, guys, kind of IT services, the big view is since we are in a headline driven market for us in India, these are the stocks which will be the headline driven stocks, because if something goes wrong with global growth and with US growth, then this is where people will actually be finding their ways to exit or to kind of go short of the ones who can. So that top down setup isn't great.
Vikash Kumar Jain there of CLSA India being the most expensive market in the world despite being short of record high levels. Take a short break. On the other side, US President Donald Trump has signed an executive order to boost domestic manufacturing of pharmaceuticals. We'll tell you how this could impact Indian pharma on the other side. Stay tuned. Welcome back. Now, US President Donald Trump has signed an executive order to boost domestic manufacturing in the US, and this is aiming to reduce the time it takes to approve the pharmaceutical plants in the country as part of the new regulations. Now, listen into what the president had to say.
That's what it's all about, right? Very important. We're going to have a big announcement next week on some of this kind of thing, but more related to costs. The costs of medicines and drugs, because we're being ripped off, as you know, very badly, being ripped off compared to the rest of the world.
Many actions that you've taken so far in this administration, sir, are related to onshoring manufacturing and onshoring supply chains. One of the most important supply chain issues we currently face as a country is our pharmaceutical supply chain. This is an executive order intended to promote domestic manufacturing of pharmaceuticals. It streamlines the permitting processes that go into building domestic pharmaceutical manufacturing sites. It centers a lot of the environmental permitting process, which is quite significant within the EPA, and it takes other actions designed to ensure that we're bringing pharmaceutical jobs and pharmaceutical manufacturing back to the United States of America.
Okay.
Now, when President Trump was asked about the tariff rates on the pharma sector and the timeline of its imposition, this is what he had to say.
President, on the pharmaceutical side, have you made any determination on kind of what those tariff rates may look like and the timing of those?
I have. I'll announce it over the next 2 weeks.
Well, how do all of these developments impact our own domestic pharma companies? Ekta is here with a lowdown of that. Ekta.
Well, thanks for that. Indian generic pharma companies are in the crosshairs as US President Donald Trump has signed an executive order to boost domestic drug manufacturing. The order directs the US FDA to fast-track approvals for US-based manufacturing facilities, ramp up inspections of overseas plants, and increase inspection fees for foreign drug makers. It also mandates the public disclosure of manufacturing sources for APIs and names facilities that fail to comply with the US standards. The Trump administration has called the 5 to 10 year timeline to build new US pharma manufacturing capacity unacceptable, citing national security risks from dependence on foreign supply chains. While not explicitly a disincentive to overseas manufacturing, analysts say the move is a clear attempt to accelerate US-based approvals. The larger picture is to aim to shift the balance of global pharma production. Multinational giants like J&J, Roche, Eli Lilly and Novartis have already pledged significant investments in the US manufacturing as well. The bigger threat looms in Trump's warning that pharma tariffs could be announced in the next 2 weeks. This comes even as the US government nears the conclusion of a Section 232 investigation examining the national security implications of importing drugs and APIs. Analysts believe companies like Aurobindo, Cipla, Lupin and Glenmark may be better positioned given their existing US facilities, but one really needs to see the cost in terms of manufacturing eventually as well. Those with a stronger branded portfolio, for example, Ajanta Pharma, Torrent, Alchem, could also weather the shift, according to analysts. However, uncertainty around tariffs is expected to keep valuations under pressure, at least in the near term.
Indeed, we'll keep an eye out on these pharma names. The sometimes yes, sometimes no saga continuing for the industry. Now, US Treasury Secretary Scott Bessent said that some trade deals might come as soon as this week, with the Trump administration receiving very good trade proposals from other countries. He spoke to CNBC from the sidelines of the Milken conference, and he clarified that China tariffs are not sustainable and both sides have not yet been talking. Listen in.
I think we're very close to some deals. As President Trump said last night on Air Force One, maybe as early as this week. So when you think about uncertainty, uncertainty, a lot of it is generated by, I have asymmetric knowledge, so I'm not uncertain because I think it's going well. Other people don't know what I know. So
you have to share that with us then.
Well, I can say that I am highly confident that we have 18 important trading partners. We'll put China to the side. The 17 other partners, many of them have approached us with the very good trade proposals. President Trump is going to be involved in all of those. He will be the final decision maker, and we'll see where that goes. I think we could see substantial progress in the coming weeks. We'll see. That I think it's Stein's law, that which is not sustainable doesn't continue. So 145%, 125% tariff levels are the equivalent of an embargo.
Yep.
And we're reading every day what's happening with factories in China. And from an academic point of view, I can tell you that the history of trade battles, we are the deficit country. The surplus country always has the most to lose.
Scott Bessent, US's Treasury Secretary. Time to take a short break, but just before we do that, here's some good news for our viewers. India's business news leader is now just a click away. Here is CNBC-TV18's all-new app, where you get in-depth articles, breaking news updates and financial world happenings all at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that's up on your screen. Take a short break. Back on the other side. Welcome back. You're watching Business Lunch here on CNBC-TV18. Now, as hostilities between India and Pakistan continue to rise following the Pahalgam terror attack, the United Nations Security Council held a closed-door meeting on the Kashmir issue. Parikshit is here to tell us what were the key issues discussed in that meeting. Parikshit, good afternoon.
Well, at the outset, we must tell our viewers that this was an informal meeting requested for by Pakistan. They want to bring Kashmir at the center stage once again. They wanted to blame India, and they wanted to tell the world that this was a false flag operation in Pahalgam, and the Indian government was actually trying to pin the blame on Pakistani forces and Pakistani-based actors when it was not so. Now, this argument, according to our top sources, was not accepted by members of the UN Security Council. In fact, they expressed a lot of concern about saber rattling on the part of Pakistan, threats of using nuclear weapons. Also, the fact that Lashkar-e-Toiba was possibly involved. They also asked Pakistani diplomats as to why people were questioned about their faith before attacking them. So clearly, Pakistan's rhetoric was not accepted at this meeting. They were asked that there should be some accountability as far as this attack is concerned. They must cooperate with India in the investigation. So clearly, Pakistan's attempts to tarnish the image of India, internationalize the Kashmir dispute, failed at the UN Security Council at this informal meet that was called by them.
Right. Parikshit, stay on, because the Home Ministry has also called for civil defense mock drills to be held across the country tomorrow. Give us more details on that.
Well, this is significant. The last time that such mock drills or warlike mock drills were carried out was in 1971 during the India-Pakistan war. We've not seen such mock drills nationwide across the country. Why is this being done? This is being done because our relations with Pakistan are at an all-time low. Hostilities are also high. Tensions are high as well. So we want to be prepared for any eventuality. And therefore, the Ministry of Home Affairs, which is the nodal body for the Civil Defense Department, has ordered drills in 244 districts. Now, why 244? Because these are areas where civil defense teams actually exist and their offices are there. Every state government has a civil defense department under it. Now, people like you and me can also volunteer to form a part of these civil defense forces, which are there to assist the local police and also the armed forces in case there is any kind of rescue and relief work that is needed in case of a disaster or hostile attack. Now, what is going to happen tomorrow? We are going to see nationwide drills in collaboration with the Army, Air Force, Navy, the police, anti-terror squads of different police forces. They will be assessing preparedness and response time of civil defense teams in case there is a hostile attack. So they will be mimicking a situation where there is an attack or there is a terror attack that has taken place in one location, and teams have to be responding to that. The efficacy of air raid sirens will be assessed. We will be seeing if all the training that has been given to civil defense teams to evacuate people, move people to bunkers, or train students to defend themselves, are all those training mechanisms in place or not? That is the large objective of this exercise. A report on the efficacy, the results, and the takeaways from this exercise will also be sent to the Ministry of Home Affairs later tomorrow. But all eyes on these drills, which will happen all across the country and all down to the village level as well.
Important updates there from Parikshit. Thanks a lot for that. By the way, just some updates that were flashing at the bottom of your screen just a few minutes ago while Parikshit was on his details about Bharti Hexacom, and TCIL has raised questions with regards to transparency in that deal with Indus Towers, and TCIL, being a government body, has a 15% stake in Bharti Hexacom. Mind you, that's a CNBC Awaaz story, our sister channel, quoting sources. So Bharti Hexacom now down to the lowest point of the day, where TCIL, a government entity having stake in Bharti Hexacom, has raised objections to that deal. Moving on, Israeli Prime Minister Benjamin Netanyahu has said that Israel will begin a new offensive in Gaza, which will be an intensive military operation aimed at defeating Hamas. Here's a report by NBC News' Matt Bradley.
Massive escalation in Gaza and a new strategy approved by the Security Cabinet to take land and hold it, they say, to prevent Hamas from taking it back. Prime Minister Benjamin Netanyahu calling it a powerful operation to defeat Hamas and free the remaining 59 hostages. We will not give up on anyone, he said. Israel says it will move Palestinian civilians to safety in Gaza's south and will revamp aid distribution, they say, to keep it away from Hamas.
We're going to help the people of Gaza get some food. People are starving. Hamas is making it impossible because they're taking everything that's brought in.
Aid agencies say Israel's new plan uses aid as a pressure tactic and say its 2-month-long blockade has pushed Gaza to the brink of famine. At one of the only remaining soup kitchens, the wait for food is desperate. We are hungry almost every day, says this little girl.
Please stop the war now. We die.
This woman says her husband, and her children are all ill. The new approach comes a day after a missile fired by Yemen's Iran-backed Houthi rebels evaded Israel's sophisticated missile defenses.
So this is the crater left by yesterday's impact. Nobody was killed, but just look at how close it was to this huge international airport.
Tonight, Israel launching retaliatory strikes against Houthi targets.
It's there coming in from Gaza. By the way, just pull up Polycab that has surged to the highest point of the day now after its results. It has very convincingly managed to cross that 20 to 22,000 crore FY25 revenue guidance that it had given, and 22,000 crores is what it has reported, 20 to 400 crores actually for the year. Although it has not shared any specific number for FY26, it does believe that the international business too will see a very strong rebound in this financial year, supported by a robust order book and a favorable demand environment across key markets. Polycab at the highest point of the day, 2.75% higher. And just before we take your leave, also pull up Paytm. That is also going to be reporting results today. That stock too not doing very well for itself at the lowest point of the day, 4.5% lower. But with that, we call time on this edition of Business Lunch from me and the team that put this show together. Thank you so much for watching. Midcap Radar for the next 30 minutes.